As with normal bar charts, line movements on a weekly RRG can look a lot different than line movements on a daily RRG. For example, the weekly RRG on the screen shows the S&P Telecommunications Sector, $SPTS, in the lagging quadrant and clearly red. In contrast, the daily RRG shows the sector rotating from the lagging quadrant all the way to the leading quadrant. How can this be? The chosen time frame affects RRGs just like regular bar charts. In the example on the screen, the left chart shows 2 months of daily data for the S&P 500, and the 2-month trend is down. The chart on the right shows 1 year of weekly data and the overall trend is clearly up. The yellow shaded area highlights the 2 months shown on the daily chart to put this decline into perspective. Clearly, this is a short-term downtrend, pullback, within a long-term uptrend. The chosen time frame affects RRGs the same way. A sector moving into the lagging quadrant on the weekly time frame, like the telecom sector on the screen, can be in the leading quadrant on the daily time frame as the sector is going through a short-term positive rotation. This short-term rotation, however, is not powerful enough, yet, to influence the rotation on the weekly RRG. This can be clarified a bit more by looking at RS ratio and RS momentum on bar charts. This chart shows weekly RS ratio and RS momentum, which correspond to the weekly RRG plot. And this chart shows daily RS ratio and momentum, which correspond to the daily RRG plot. Notice how the weekly indicators show negative momentum and a long-term downtrend in relative performance. The daily indicators, on the other hand, turned up and moved above 100. Assuming that weekly rotations are stronger than daily and that a rotation will follow its normal clockwise course, one would expect the positive rotation on the daily time frame to be temporary in nature. In a normal rotation, the sector would move through the leading quadrant, cross into the weakening quadrant and push into the lagging quadrant, thus keeping it solidly inside the lagging quadrant on the weekly time frame. In other words, the daily move is a short-term hiccup within an otherwise falling relative trend on the weekly. As with all aspects of technical analysis, it is a very good habit to study different time frames to get a complete picture. The telecom sector is clearly deep inside the lagging quadrant on the weekly RRG, and moving further into the red. The decrease in negative momentum, which can be seen by the leveling of the trail slope on the weekly RRG, translates into a quick positive rotation on the daily RRG.